Good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy, and economy. 20 minutes ahead of time here on News9. With me is Suyash Maheshwari, as usual. Good morning, Suyash.
Good morning, Shweta.
Markets opening in green. It's a good, positive start once again.
Yes, Shweta. So the markets have opened, in fact, in the green and have extended on yesterday's run, where we saw about a 0.5% rally in both the headliners. So markets this opening, has opened with Nifty rescaling the 19,600 levels, whereas Sensex has surged about 150 to 160 points this morning. And the broader markets, Shweta, have also been buoyant, and they have been largely in line with both the headliners, with Nifty Mid Cap 100 and the Nifty Small Cap 100 up about 0.39% and 0.3%. Also, the volatility has significantly come down. India VIX was down by about about 6% at 10.94. So this will perhaps augur well for the bulls. Now, looking at the sectors this morning, Shweta, the IT pack continued to build on yesterday's momentum. The Nifty IT pack was up about 0.4% yesterday. It rallied about 1%. The pharma pack is up about 0.67%, but today the rally is being led by the metal pack, and all the metal stocks are trading with moderate profits, and Nifty Metal pack on the whole is up about 1.2%. Now, one of the reasons why the metal pack is rallying is that crude has Brent crude especially, both benchmarks have come down significantly and have cracked up by $12 to $13 in the last 2-3 days. Brent crude has fallen below the $85 a barrel mark. So that is perhaps playing in favor of the metal pack. Apart from that, the auto index is also up about 0.5%, and Nifty Bank has also is also showing some strength this morning, and currently sits above the 44,250 mark.
All right, that's the lowdown as far as markets this morning is concerned. Joining us is Rohit Srivastava, founder and market strategist at India Charts. Rohit, good to have you on the show. Thank you for taking time out. What are you making of the rally in the Indian markets? Both Sensex, Nifty ended at least 0.5% higher yesterday. It looks like they're taking on from that green shoots.
Yeah, we've seen almost a 2-week correction in the Indian indices. It would look, based on yesterday's behavior, that we could be close to the end of that. You want to see the indices hold above 19,580, 19,600 for the day today. If that happens, then we can come to some kind of a short-term conclusion that yes, we have the bottom in place, and we can start looking at a bounce or even a resumption of the uptrend that was already going on for the last several months. So we are waiting for those signals, but it does look like there's an exhaustion, at least in the short term, based on some of our sentiment indicators, and therefore the sense is yes, we may be done here. There's also an interesting observation over the last 3 days, because this was mainly global panic. You did see the markets gap down 2 days ago, and yesterday it actually gapped up. So sort of there was no trading between the 19,450 to 19,480 range, which technically we call as an island. It happens when you reach a price point where there's panic and then relief, and then you don't go back to those lows. It ends up becoming a trap for the bears. So let's see if that happens. We'll have to observe those levels for the next 2 days to confirm what is going on.
Before I let my colleague take over, I do have to ask, we are awaiting the monetary policy decision in just about 15 minutes, as I see on the clock from now. That could be one of the reasons why markets have opened in the green. But what are your big expectations as far as, inflation commentary is concerned?
They very much stick to what they said the last time. Their inflation outlook is pretty clear, that it's not dropping, but at the same time it could sort of get flattish over here. But we don't have that big an inflation problem, I think, in India, as we have seen in other parts of the world where it is actually sticky. A lot of the food inflation we saw in the monsoons were usually the seasonal effect of what happens during this point of time because of the rains, and so it's not something that we can really see as structural inflation. So therefore, it may be temporary. It will go away as time progresses. What you want to actually see is whether we can go back to a monetary easing condition at some point of time. I think looking at the setup globally, because there's been a significant bond market rout in the last 1 week, it may be very difficult for us to move into a low rate environment immediately. I think we are eventually going there. So net, I think there'll be a policy stance is going to be neutral today, just a continuation of what they've been doing so far. The commentary might just help pacify people in terms of the risks that we are seeing around the world.
Hi Rohit, Suyash. I mean, yeah, RBI monetary policy, I mean, as far as the rates go, should largely be a non-event for the markets, because most of the analysts, brokerages and the reports that we are reading expects RBI to, maintain rates at 6.5% in this monetary policy meet. But do you expect them to flag some caution, given that the yields in the US have run up significantly? I mean, last time around in August, when RBI last policy meet, the US 10-year bond yields were at about 3.95% or so. Currently, they are at 4.7%. So, to stabilize rupee, prop up that short-term yields, do you expect RBI to flag some caution here?
I think RBI on its front is anyway taking action. If you simply look at the Indian currency and bond market, this has been a pretty meaningful rout, especially in the bond market globally. But the impact on our own markets has been very, very muted. In fact, in the bond market, it's been nothing. Bond yields have just not gone above 7.2% throughout this time period. USDINR has been in a very narrow range, finding it very difficult to get past 83.50. So that shows that there's a lot of stability, or there's some level of intervention where the RBI is able to manage the current situation. We are really not seeing any risk out there. They can highlight that, yes, they're watching what is going on. But I don't see any domestic risk really showing up right now. I think the only concern from the markets has been that FIIs, which is the foreign institutional investors, have been consistent sellers in the Indian market over the last 2 months and have continued to do so in the early days of October. That's a pattern you'd really want to see change. It's not happened, and I think that's the risk that is really there right now, because the route in the global markets is pushing FIIs from really starting to buy in the cash market in India. And I think that has some impact on the currency flows.
When are you expecting FIS to evince some interests in emerging market economies? Is there a timeline that you're looking at?
Now that the bond yields have also started to ease, so perhaps in the next month or so, given that dollar
is that your expectation? What's your expectation?
So I think the dollar is key. We've seen it almost for 13, 14 weeks going up consistently, closing week after week higher. Moment we start seeing that pattern reverse, where the dollar starts to weaken again, that's the first sign to expect emerging markets to start getting flows from institutional investors. So I think the dollar plays a big role when it comes to asset allocation to EMs, EM debt. Like Indian debt is likely to get far more attractive with the inclusion in so many bond indices. So that's a big reason for interest rates in India to go down. But it does require the currency front to be strong, and for that, I think the weakness in the dollar would be one reason why institutional investors would consider both emerging market equities and debt as an investment horizon.
Now, Rohit, given that the markets have seen high volatility in the last couple of weeks, the experts that we have been talking to are largely split. Some expect Nifty to perhaps break down to 19,000 levels, even in fact correct by about 5% to 18,500, 18,600, whereas others expect Nifty to rescale new highs by the time October end comes. So what is your broader expectation? Where is Nifty, where do you see Nifty ending the October FNO series?
Yeah, so that's taking a very near-term view of things. In the big picture, we should understand that we are in a bull market. That's the main point. And if you simply look at how earnings have been growing, last quarter itself, we have a 30% Y-on-Y earnings for the July quarter. Now we're going to be starting the October earnings season pretty soon. And if it continues in that pattern, then there's good reason why equities should actually head higher, because we've already seen a correction in the last 2 months, right? August was down. We attempted to go back to the highs in September, but that gave up again. So it's sort of become a very long consolidation over 2 months. I mean, even for the Bank Nifty, it's been a range. It's not that Bank Nifty is crashing or anything. It's simply gone from the top end of around 46,600 to a bottom end of around, 43,700 odd. And if that consolidation completes, the point should be we go back higher. Now, October seasonality is also pretty good. We do that cross check on our strike software, where the best seasonal month of the year was actually July. After that, it weakens into August and September, and then it actually starts to pick up in October. So October is likely to be better than September for sure. The extent is what we really will have to figure out.
Now, I also want to touch on Bank Nifty. Bank Nifty has corrected sharply, in the last couple of weeks. In fact, it fell below the 44,000 levels very recently for the first time since, earlier September 1 or September 2. What's your broader outlook now that, we are seeing some sort of a reversal also playing out in the HDFC in the HDFC Bank stock also?
Yeah, so the first step is going to be, getting past 44,400 very, very short term. Once we do that, we can say that, okay, this 2.5, almost 3 weeks now correction is coming to an end. Once we say that, then we'll start looking initially for a retracement, typically 61% of the entire fall, which takes us back to maybe a 45,350, and then eventually back to new highs. Those are the two things we'll keep in mind, because sometimes you do falter at the retracement. You can remain in this broad 2-month consolidation range for longer. So we can't take that call immediately whether you'll remain in this range or will you, start to break out in the next move up. For that, we'll watch that particular level, 45,350. If we go past that, then the odds of going back to new highs would increase significantly.
And what's your outlook on HDFC Bank? I mean, as I said, it is seeing some sort of a turnaround, and there is at least it looks on the price chart that they are building a base at around 1500, 1520. In fact, in Wednesday's session, it was the only constituent stock that gained perhaps about 1.5%, where every other stock in the Nifty banking pack fell. So what's your broader outlook on the HDFC Bank?
So let me just mention, we don't really give investment advice. So this is just my opinion of the situation, which is that you have seen the private banks like HDFC or Kotak show weakness relative to the PSU banks. But I think there's a strong case for rotation. This market has been all about rotation. In fact, the same can be said even between mid caps and large caps. So I think it's time for some kind of rotation to happen where the private sector banks actually show some performance on a 1-2 month basis after all the selling that we have really seen, which a lot of which may be associated with the over ownership by foreign institutional investors that have been selling, right? So that also will play an important role in getting this turnaround for these particular banks. But I think private banks have a room. They're very, very oversold, so they have room to turn around and show some performance relative to PSU banks that have been, driving most of this move so far. And in fact, on the opposite side, the PSU banks have seen something which we call as a volume climax, where the most recent rally ended up seeing significant volume trades. And whenever that happens, it's time for a consolidation. So you could get rotation into the private banks relative to PSU banks.
And do you expect that correction or consolidation to continue in PSU banks, as you said? Because PSU bank, in fact, is the only sector that is trading in the negative this morning.
Yeah, it takes a month or two for consolidations to complete. So you'll have to give it that much time once it starts. I'm not putting a 100% certainty on it's happening, and there could also be a divergence within PSU banks, within the big and smaller players, just like the mid cap, large cap, because you're seeing these smaller names like Union, Canara, and so on do very well, but you really haven't been seeing performance in SBI and BOB. So if I get rotation between large caps and mid caps, you might see better performance from an SBI compared to the others. So even that must be noted when we say something like, PSU banks need to cool off or consolidate, but that might really mean only the smaller ones compared to the bigger ones.
All right. And as far as IT Pack is concerned, we are awaiting earnings, but even JP Morgan commentary coming in this morning expects it to be a washout year and perhaps a washout quarter as far as second quarter is concerned. What are your expectations with IT companies, given that discretionary spending hasn't picked up just as yet? Number of deals signed, but a substantial sort of impact of those deals will only come out, perhaps only play up by third quarter or fourth quarter.
Yeah, I think this is a tough year for IT. We did think that possibly the worst was over for the sector a month or two back, and they've moved up a bit. But if we look at this rally, it looks quite lethargic. But having said that, I don't think that you go back to the lows for the sector in terms of stock prices. But the move higher is likely to be a little slow and then pick up momentum as the year moves along. I think that is how we'll have to look at it.
But I mean, the heavyweights are rallying. In fact, in yesterday's 1% rally, TCS, Infosys also amassed a rally of about 1 to 1.5%. So, I mean, the mid cap space might be looking a little hot right now. But do you expect the rally to continue in the large cap stocks?
I very much do. So I did mention that there's going to be a rotation between large cap and mid cap. If we look at the mid cap indices, their RSIs were reading 87, 88 in the month of August. We saw that one day big dip that sort of helped in bringing that down a bit. You may see a further consolidation till that number comes back to a 70 or lower kind of stage. So it's very much possible that you see greater performance in large caps, which is far overdue. I think, and that's something we should very closely be watching, because when you get a large cap rally, it's also associated with Nifty going up. So you'll see pretty much, a lot of participation from the big stocks, which has been missing. I think that is something that is likely to come.
And yeah, the higher rates or for longer narrative that is coming out from the US, how much of a overhang will that play on the IT pack?
See, the Indian IT pack has been very different from what is happening in the US. Because it's a very different sector. Also, the US rates. One thing is looking at what the Fed funds rate is, and the second thing is looking at bond yields. The risk in the short term, which has been so highlighted, has actually been bond yields, and bond yields will really follow the news around inflation, the data around inflation. So inflation data has actually been cooling off over the last 2 months, though there may be some 1 or 2 week periods of data that went up a bit recently. So eventually, if the trajectory downward continues, the bond market will be quicker to trigger a reversal than the Fed itself. So in that sense, also look at how the Indian tech stocks have done relative to the Nasdaq, at least on the last month or two, because that's when you've seen the most recent correction on rising bond yields has hit the Nasdaq, but it's actually not hit Indian IT that badly. So I think we are pretty much stable here. We've discounted some of the worst, and as things improve, we should do well.
And Rohit, what's your view on the metal pack now that we are seeing some sort of a correction playing out in crude prices? In fact, they have corrected by about $12, $13 in a span of 10 days.
Yeah. Yeah, so I think oil prices ran ahead of the rest of the sector, because if you compare copper prices, aluminum prices, they haven't really moved up that much. The sector as a whole, of course, depends a lot on what the trend of the dollar is, which we actually discussed earlier. So as long as the dollar is rising, usually commodity prices are under pressure. Having said that, the Indian metal stocks have actually shown resilience and held up. When you look at stocks like Hindalco or Tata Steel, they've actually been moving up over the last 2 months, despite the rise in the dollar and despite weak commodity prices. So some way, I think participants in the market are anticipating that these trends in the near term are not going to be permanent, and some level of accumulation has already been happening in these counters. Now, once you actually see the reversal in the dollar, you will see a pickup in the commodity prices. But specifically for oil, I would just want that it doesn't move up that fast. If commodity prices move up slowly, they're really not a big component of inflation. So they won't cause a scare. If they move up fast, then it definitely scares everybody and everything. But it's still a good sign that when you get a weak dollar and rising commodity prices, the metal sector does well, and that's something to watch out for. 13 weeks of advance in the dollar means we are closer to the end of this move.